So by no means is this advocacy to buy, sell, hold Bitcoin. I can't help anyone buy, sell, hold it. We don't buy and sell Bitcoin here. There are Bitcoin-related products, but Bitcoin itself. So this is not a recommendation um, or the opposite of one to buy it, sell it, hold it, all that stuff, right? I'm simply here to comment on Bitcoin and do some research and kind of show you the curiosity I've had. So let's run some disclaimers and I'll be right back. Let's do it this way. Move me over here. And I went through this a little bit ago, just so I could speed it up. Let me kind of show you what I've done and we'll kind of try and figure this out together. So my first question was, how many Bitcoins will there be? And I kind of knew the answer to this. So there's going to be 21 million Bitcoins that can ever exist. There's 19.8 million that have been mined now. And the last Bitcoin is expected to be mined around the year 2140. Okay, so I'd forgotten that aspect, 115 years out. And I think the reason the price keeps rising is because of this, the facet of the finite supply. There's only ever going to be 21 million Bitcoins out there. So I knew that. And I'm like, okay, well, what should the value of all these 21 million Bitcoins be? All right, so let's see. What is, do this one. What is the market value? Can I scroll down here yet? What is the market value of Bitcoin? And again, simply just clotting, if that's a verb now. Bitcoin's trading at 113,337 or thereabouts. They're calling it maybe 114. So the total market cap of Bitcoin right now is about 2.24 trillion at these prices. 19 million Bitcoins in circulation times their 113,337 per Bitcoin. So 2.24 trillion of Bitcoin in circulation right now. Okay, so how about this? How much, yeah, I'll do this one first. How much money is in circulation in the U.S.? Let's just specify. Let's see what it says here. There's different money supplies, M1, M2. It's like how they count money. So M1 includes physical currency plus demand deposits, checking accounts and other highly liquid deposits, money markets. M2, right, includes M1 plus savings accounts, right? They don't think you're going to spend that. Small time deposits, CDs. Oh, money markets are here. M2 is 21.942 trillion, and physical cash is 2.39 trillion. So 3.9 trillion of cash in circulation, and Bitcoin has a value of 2.24 trillion. I mean, I found it. Is it coincidental that they're so similar in numbers? I mean, Bitcoin, for all intent and purposes, equals the amount of cash that's in circulation. So can we replace dollars with Bitcoins? Will that ever occur? Well, I don't see that because we'd have to pay the Bitcoin dollar holders dollars for their coins. Then they'd have all the dollars and we'd have all the Bitcoins. I kind of don't want it that way right now. If we give them dollars for Bitcoins, now instead of 2.4 trillion, just help me with this math here, 2.4 trillion in circulation, we give them dollars and wipe out Bitcoin. Now there's 4.8 trillion of cash in circulation. Does that cause inflation? So I didn't ask that precise question, but I asked, should the market value of Bitcoin equal the value of currency in circulation? I mean, should these things be at parity? Claude says, no, there's no economic reason why Bitcoin should be. Um, 2.39 physical circulation versus a whole money supply of 21.9. And keep in mind, again, that's banks have reserve requirements, and I guess it's around 10%, right? If you put $1,000 into the bank, they need to keep $100 of it, presuming you might need some money, but they're allowed to lend $900 out to anyone who, home loans, car loans, business loans. They can lend out 900 of it. They have to keep 100 around 10%. And I guess that's a function of the Fed in determining how much money people generally withdraw from their accounts, and it's all well thought out, I'm certain. So, but should Bitcoin be equal in value to the cash in circulation, at least here in the United States? I mean, Bitcoin's a global thing, but it's just ironic that it's equal to the U.S. dollars in circulation. So, Bitcoin's current market cap approaching that of physical U.S. currency in circulation is more a reflection of speculative demand than perceived value as a digital gold. Um, the comparison is somewhat like asking whether the total value of all gold should equal the money supply. They serve different economic functions despite both being considered stores of value, right? So then I asked, could the widespread, so we're not going to give Bitcoin holders cash for Bitcoin. We're just going to start accepting Bitcoin in business and food stores and car dealerships and for homes. I mean, some companies already do accept Bitcoin, just not widely accepted. So could the wide adoption of Bitcoin contribute to inflation, right? $2.4 million of cash in circulation, 2.4 trillion of Bitcoin now becomes widely accepted. So let's see what it says here. Bitcoin could potentially contribute to inflation through several mechanisms, though the relationship is complex and depends upon how the adoption occurs. Wealth effect. If Bitcoin prices continue rising, holders experience increased wealth, right? Those holders get more money, which could lead to higher spending on goods and services, driving up demands and prices, right? So that was kind of my hypothesis. Portfolio rebalancing, energy and resource costs. But what struck me as quite interesting here, and I had to think about it and then come up with an example. If Bitcoin becomes a preferred store of value, people might hold it instead of spending it, reducing money velocity and potentially creating deflationary pressures, right? No one's spending it, so things need to cost less to make you crack open your wallet, right? There was something else in here about that. I guess I had to ask it more succinctly. Explain to me how a fixed amount of Bitcoins can be deflationary. And it goes on to say growing demand versus fixed supply, right? Growing demand. I need more bread. I need more milk. I need more gas. But I have a fixed supply. So think about it like this. So, let me read this. As more people want to use Bitcoin, while the total supply remains capped at 20 million, basic supply and demand economics suggest the price should rise, right? The price of Bitcoin should rise, making each coin more valuable, which is the opposite, they're calling it the opposite of inflation, where money loses value. And so they say, well, compared to the gold standard, historically, when currencies were backed by gold, economies often experienced deflation. And what was hard for me to understand about this, I had to think about it. Growing demand versus fixed supply, you would think, well, we all want more Bitcoin, so the Bitcoin price would rise. Yes, but what Bitcoin can buy, those prices would have to go down. And put it into perspective like this. If you were allotted a million Bitcoins for the rest of your life, you then would look for the best. You have no more money. That's it. 1 million Bitcoins for the rest of your life. You would then look for the best price of bread, gas, housing, clothing, other foods, other necessities, other basic resources, and then discretionary spending, right? You would have to get the best prices so that your 1 million coins lasted your entire life. There's no more coins. Now, I understand you can go earn more or something like that, but there's a finite supply, so people are going to be less inclined to pay you their Bitcoins because there's only so many, whereby with the United States economy and all these economies around the world and everyone, we just keep printing more money here. And so because the general consensus here is that over time prices will go up, you will buy something sooner than later. If you think tomorrow or next week there's going to be a sale, you're not going to spend your money. Then there's a sale, your item gets sold, you don't get it, you've got to pay the regular price. But if you but you're willing to do that because that you know that there's going to be money made and money fabricated around here through the system such that you have $1 million today, more than likely you'll have $1,010,000 tomorrow, $1,050,000 the next day, 1.1 million the next. But Bitcoins are a finite supply. If you only had $1 million for the rest of your life, only 1 million Bitcoins, you would have to pay less for what you're buying so that your money could last, and that's the deflationary pressures of a finite supply. So this really doesn't completely answer the question. It's almost impossible. What should Bitcoin be worth? I mean, it should be worth whatever it's trading in the market. I mean, if that's the way the world perceives the price of these things, then that's the reality of the price today. Will the price go up or down? I don't know. There are many factors. And because I haven't been able to conclude myself, that's why I have never bought Bitcoin. Now, I mean, obviously, anyone who didn't buy it has missed out for sure. But is anyone buying it now holding a hot potato? I can't say. But I really thought it was interesting to try to take this question to one of the AI bots. And I really thought it gave me some great feedback and potentially helpful for anyone considering buying, selling, holding this, what to do. Again, I'm not advocating any of those three. I'm simply trying to make, just trying to understand this a little bit better. So that's it for now. See you back here next time.